I'm endlessly fascinated and curious about the world around us, about business, about politics, about the arts, about culture, developments, social issues, and the people. Most importantly, about the people that are shaping our future. Every night, I get the opportunity to have conversations, to dive into conversations with thought leaders, with change makers, entrepreneurs, politicians, and everyday heroes who unpack the ideas and stories that I think matter to all of us. What's the future of our economy? What's the future of our country? How do we build stronger communities? What can we learn from music, theater, sports, politics, the arts? How does policy shape our real lives? What does leadership look like, real leadership in today's environment? If it's interesting and relevant and topical and we're talking about it, you'll hear about it here at 6 o'clock on the Brian Crombie Radio Hour. I want to have real conversations, in-depth conversations. These are ideas we're sharing. This is the Brian Crombie Radio Hour. Thanks for joining me. Good evening, everyone, and welcome to the Brian Crombie Radio Hour. I've got Jim Stanford with us tonight. He's an economist and director at the Center for Future Work. He's been affiliated historically with the Canadian Auto Workers, and I've really followed his career. And he wrote this past weekend a really interesting article about the Canadian automobile sector, particularly after the Stellantis closure. And I guess we've now heard more bad news. And you were pretty critical about what you thought the automobile company strategies were, what they were doing, what Trump is doing, and what Canada needs to do. So, Jim Stanford, welcome to the show.
Thank you, sir. Thanks for having me.
Well, what's the answer then? What should we do?
Well, the Stellantis decision, they're not closing the plant. Very important to emphasize this. In fact, they're still, retooling the whole plant in Brampton. This is the big former Chrysler, now owned by Stellantis assembly plant in Brampton, and employs about 3,000 workers. But they've been off for the last year and a half because the company's retooling the whole plant. Now, what they've done is they've announced the first vehicle that was going to come off the line at that new plant, which is a Jeep, a smaller Jeep. They're moving production of that to a factory in Illinois. And they're clearly doing that in response to Donald Trump's tariffs and just his kind of general intimidation of companies that he wants global manufacturers in all kinds of industries to shift their investment and high-tech production to America. So this was clearly a bone that the company was throwing to Trump, and unfortunately, that means Canadians get the short end of the stick. And it's very worrisome, Brian, because it could be the canary in the coal mine, if you like. You know, we've been facing these tariffs in various industries, including auto and steel, and now heavy trucks, and coming in heavy industrial machinery, aerospace, pharmaceuticals, etc. And the industries that are producing right now are paying a price for those current tariffs. But the biggest danger of Trump's strategy for us is when they start to move production in a sort of longer runway to the United States. And that is, in a way, the Stellantis decision was the first clear example of what's at stake if we don't find a way to reinforce the incentive to be located in Canada, even with Trump's tariffs.
So I always heard that these things, these manufacturers can't move to the United States. There's billions of dollars of investment. It's going to take 5 or 10 years for the capex to be put to work, and that with 3 and 4% unemployment in the United States, there's no workers to employ.
Well, first of all, they've got multiple plants on both sides of the border. So you're right. They can't pick up the Brampton plant and move it to America. But if they have a plant in America, particularly one with some extra capacity that's not being used, then it's easy to shift production of a particular model to that place. The plant, as I mentioned, in Brampton is still here. So a key challenge now is going to be to try and cajole and compel Stellantis to make use of that facility. You know, they got good public subsidies to do the retooling. They're getting subsidies in other parts of their business. So we want to see that plant stay and be fully utilized. But if a plant isn't being utilized, sooner or later it's going to get shut down. That's the risk. And that's what we, I think, have to guard against. And there'll be other companies, not just in auto, but in other industries, that look at this Stellantis decision as a kind of litmus test. If they're able to, avoid Trump's tariffs by moving their production to America, yet still have full access to Canada's market, then that's probably what they'll do. And this is why it's an important moment for Canada's strategy around auto and other high-tech industries.
So what do you think Canada needs to do? Supposedly Melanie Joly, the minister in charge, has demanded that Stellantis executives come to Ottawa to explain themselves. Should we demand something from them?
Well, she did more than demand that they come to Ottawa. They did go to Ottawa. She also threatened legal action because in return for the subsidies that Stellantis got on the plant, and they've also gotten subsidies around some of the electric vehicle battery operations that they're building in Canada. And they have been partly exempted or largely exempted from Canada's retaliatory tariffs on autos. You know that Trump put a 25% tariff on autos. So we put a 25% tariff on U.S. made automobiles coming into Canada. But companies that are in Canada, including Stellantis, get an exemption from that because of their footprint here. So on all three of those different tranches of public support, Stellantis committed to maintaining its manufacturing footprint in Canada. And that is not just a moral obligation, it's a legal obligation. So that's why the industry minister was threatening legal action. That should be the start. They've also made commitments to the Ontario government. They've made commitments to auto parts makers across southern Ontario that have invested hundreds of millions in new tooling to get ready to supply the parts for those vehicles that are coming off the line or were supposed to be coming off the line in Brampton. And they've got a binding collective agreement with Unifor, the union, which specifies that this model and others will be produced in Brampton in return for different commitments that Unifor made. So in a way, every single one of Stellantis' key partners has been thrown under the bus by this decision, and they're going to face political pressure, moral pressure, and legal pressure, hopefully economic pressure, to make sure they do use that Brampton plant fully down the line somewhere.
Now, it got worse with an announcement from GM. What's that announcement, sir?
Well, this week, General Motors announced that they're going to pause production of this electric utility van that they've been manufacturing at their plant in Ingersoll. That's an assembly plant in Ingersoll, just down the highway from Brampton. And various reasons for that. You know, one of them is that the vehicle was not selling as well as they hoped. But again, that vehicle, most of the output was destined for the U.S. market. So now there's a 25% tariff on medium and heavy duty trucks that Trump has brought in effective November 1st. So it's another hammer on the industry, and that was absolutely part and parcel of GM's decision in Ingersoll. So there's in a way, a parallel situation where the plant is still there, the capital is still there, the skilled workers are still there, the supply chain is still there. Ontario is a great place to build vehicles. We've got high quality, we've got lower labor costs, and high productivity. But GM is going to have to be pushed and cajoled and compelled, just like Stellantis, to make use of that plant. Otherwise, it'll be the same story. We'll have to go after GM for the subsidies that were paid, both for retooling that plant and the other operations they're getting, and get ready to punish any company that thinks they can leave Canada but still take our market for granted. That is ultimately going to be a big part of our leverage.
Now, I thought automotives was covered by the USMCA or CUSMA or NAFTA or whatever it's called today. What's going on?
Gee, I thought all of our exports were covered by that free trade agreement. So that's where we're in a parallel universe where Donald Trump is concerned. Remember, he's the one who negotiated that agreement. He negotiated that agreement. 2019 was the agreement. He stood up and proclaimed it was the best trade agreement in history. And then, you know, next kick at the can, he comes back into office and he just starts ignoring it.
No, worse. He said, who was the goof that negotiated this agreement?
Look in the mirror, Donald. But anyways, so none of this is consistent with the free trade agreement. Now, he's got two categories of tariffs. One is the across-the-board tariffs, 35% for most products. But most products right now are getting an exemption if they can meet the rules of origin criteria in that trade agreement. So this is one thing that in a way is saving Canada the worst right now. But he's got a second category of tariffs called his Section 232 tariffs, which are justified supposedly on grounds of national security, but it's all bogus. They are not exempted under the rules of origin of the CUSMA. They get the full bore of the impact. So auto, steel, aluminum, copper, pharmaceuticals, heavy trucks, aerospace products, industrial machinery. This is the lineup of industries that Trump is targeting with these 232 tariffs, and there's no exemption under CUSMA for it.
How
And
can
that's
he-
because he said up front, where cars are concerned, they should all be in America. And that's exactly what he's trying to do now.
Number one, how can they all be justified based on national security reasons? And then number two, given what he said, which has got nothing to do with national security, his testimony has got to be evidence one in regards to what his real reason is.
Right. Yeah, you would think so. So many of his tariffs have already been overturned by courts in the U.S., but the government just appeals to the Supreme Court. So the Supreme Court in the U.S. is now going to hear the first of these cases around, is Trump legally entitled to declare national emergency, as it's called, or national security reasons to pull out his black Sharpie and just unilaterally impose a tariff on some country and some industry. Sometimes he imposes one tariff in the morning and then gets the Sharpie back out and imposes a different one in the afternoon. That's how, in a way, unaccountable his actions are, even within the U.S. Judicial system. So everyone's going to be watching what happens with this Supreme Court review. I think most people agree that this national emergency criteria is bogus, that certainly the lower level courts in the U.S. agreed with that. On the other hand, Trump kind of has the Supreme Court in his back pocket because of how the politics of Supreme Court appointments have worked in America. So I don't think we can hold our breath. That would be lovely if the court ruled against them. And if Trump accepted the ruling, he in many cases does not accept judicial rulings. But in any event, I think we have to be prepared in Canada to say this sort of long-standing arrangement we've had where, we share our markets and get the efficiency gains that come with it. That arrangement cannot be trusted. And this is where we're going to have to, in a way, go back to some of the principles like we had, Brian, in the former Auto Pact, where the companies would get a benefit, free access to our market, but only if they produced here. That was a principle that worked very well for 30 years. And I think it's a principle that could come back in this environment.
So I think I studied the Auto Pact in Politics 101.
Yeah.
And it was used as an example of great trade negotiations for a long period of time. And as you say, it was a demand that you have to produce in the country as much product as you sell. And that was applied on a company by company basis, was it not? So that Ford would have to produce 10% of their North American production in Canada if it was selling 10% of its North American production in Canada, et cetera, et cetera. Was that not correct?
Absolutely. It was applied on a company-by-company basis, and then even further, it was applied separately between cars and medium and heavy-duty trucks. So it did mean that Canada got a good share, not just of overall auto assembly, but also of trucks, including pickup trucks and now SUVs, of course, but also medium and heavy-duty trucks, which were an important part of our industry. So it was a very effective model, and it wasn't just the Detroit companies that, the big three, Ford, GM, and Chrysler. Volvo, for example, manufactured autos for decades in Canada under the Auto Pact. Then when the Auto Pact was kind of set aside after the World Trade Organization was formed, Volvo stopped doing that. So that should have been a lesson. We also had heavy truck makers like Navistar and International Trucks with major plants in southern Ontario because of the Auto Pact. Same goes for some of the auto parts companies, because it wasn't just number of cars that was required. It was also what was the value added within the car, including key parts like frames and engines and so on. So all around, it was a great strategy. But then we kind of threw our eggs in the basket of the free trade agreement when that came along, thinking being guaranteed access to the U.S. market was all we needed. And now it turns out we were not guaranteed access to the U.S. market.
So what's wrong with the Auto Pact idea? What's wrong with the idea of the same number of cars sold or produced?
I think it's a great idea. It was challenged at the World Trade Organization by some of the offshore automakers on grounds of so-called national treatment. One of the sort of ideals of a sort of perfect free trade world is that you shouldn't discriminate against companies based on where they are. Now, in practice, that happens all the time. Government procurement, or think about the military budget in the U.S. and how they use that to support U.S. companies. Even, some of the non-tariff barriers that are used in Europe or in Asia. So there's a difference between the real world and the sort of ideal. But at the time, the Canadian government accepted that that if you're going to sell here, you got to make here principle was outdated in the era of the World Trade Organization. Now is time to go back and rethink that, and to some extent, we're actually doing that right now. This duty remission program that I mentioned, where companies can be exempted from the 25% counter tariff that we're putting on vehicles from the U.S. if they have a manufacturing footprint here. That is kind of the reincarnation of an auto pact-like principle. So I do think that part of what we need to do in response to decisions like Stellantis and GM and so on is going to be to say, yep, that is the way. That is the way now. The World Trade Organization is defunct. It can't make decisions. The appeal courts are not being staffed. The U.S. is just ignoring the free trade agreement. So we can't be the Boy Scouts in world trade anymore. We have to look after our own industry and make sure we get a piece of these key sectors, again, not just auto, but all of those other high-tech sectors, make sure we've got a piece of them as we go forward, Trump or no Trump.
You've worked with the Canadian Auto Workers. You worked with Unifor, probably more experienced in negotiations than almost anybody, given the amount of labor negotiations you've undoubtedly been involved with. I had dinner with a friend of mine, an American businessman who was in town, and he said, "Brian, calm down. This is just Trump's strategy. It's the theory of outrageous negotiation. And what you do is you come up with an outrageous position to soften up your adversary and come back with a more reasoned position. And you'll get better than you otherwise would have because you started from an anchoring with an outrageous position." What do you say to that, sir?
Well, I mean, that's what we hoped when Trump was inaugurated this time and started talking about the 51st state and all that. You know, we hoped, well, he's just trying to shock us, and then he'll do what he did in the first term, which is come back in the course of the next year or two and negotiate, you know, tweaks to the previous free trade agreements and then carry on. But it does seem to be a different incarnation of Donald Trump this go around, in part because of all his attacks on the judiciary and the media and everything else in terms of how politics works. So, you know, I think the federal government and their negotiations with Trump, they're hoping that they can at least talk him back from some of these aggressive tariffs. And there's rumors that we might get a partial deal on energy, for example. Of course, they want our energy. But, you know, if we give them our energy and don't get something back on all these other industries, well, you know, we've just given away the farm. So I do think that not just to push back at Trump, but also to push back at the companies. This was not Trump's decision. This was the company bowing to Trump. And to tell that company, look, your bottom line depends on selling vehicles in Canada. It's not the world's biggest market, but it's a big market. It's a lucrative market. It's 2 million vehicles a year. It's $110 billion a year we spend on new cars in Canada. You want a piece of that, you got to produce here.
And we've done legal agreements with you.
That too. Quite right. Don't forget those. And a legally binding collective agreement with the workers. So for all of those reasons, morally, legally, economically, I think we can work to defend this industry, which we have to. It's vital in Ontario, but it's vital for Canada.
We're chatting tonight with Jim Stanford, the economist and director at the Centre for Future Work, a gentleman who's a major commentator in Canada and someone who's written a really hard-hitting column recently about how Canada needs to respond to these auto companies that are making decisions to move to the United States. We're going to take a break for some messages and be back with Jim Stanford in 2 minutes. Stay with us, everybody. Welcome back, everyone, to the Brian Crombie Radio Hour. I've got Jim Stanford with us tonight talking about Stellantis's and GM's decisions to close down factories in Canada and effectively move them to the United States and what Canada's response should be. I've got a couple of questions to ask you about this, if I could, sir. I was at a presentation by Benjamin Tull, the Deputy Chief Economist of CIBC, a week ago, and he said, all you people that think that tariffs are going to go away are living in fantasy land. The U.S. deficit is so high, and the receipts that the U.S. government are receiving from tariffs are so big, they become addicted to it, and they can't give up this tax. Because effectively what it is a massive sales tax paid primarily on foreign goods so that the American consumer may not see it as much as they otherwise would. And the American deficit can't survive without these tariffs. And in addition, Trump is enamored with the Gilded Age in the 1880s, 1890s, where tariffs financed the U.S. government. What do you say to that, sir?
Well, I think Benjamin's got a point there. Internally in the U.S., the tariff policy was very much tied to the fiscal strategy of Trump in the government. He has implemented some very expensive tax cuts for high income owners and for financial investors. And he has been counting on the tariff revenue to help offset some of the loss to the Treasury from those tax cuts. And even with that, it wasn't even a net wash. The deficit is still growing much faster under Trump than it was before. So for a supposed conservative, what you're seeing is runaway deficits and also a very regressive shift in the tax burden. The tax cuts that he's implemented are very focused on the high end of the income ladder. The tariff, like you say, or like Benjamin Tal said, is kind of like a sales tax, which means it has the biggest impact on lower income people. So that is a warning. And, we don't know where Trump's going to go. We don't know how the elections in the U.S. are going to go, or even if they're going to have fair elections. And even if Trump is gone, this change in direction in policy is not going to suddenly reverse itself, including for some of those fiscal reasons. So this is why Canada has to be ready to kind of stand on its own 2 feet around some of these industrial policy issues.
If tariffs aren't going away, should we have a Canadian, a made in Canada automotive company?
Well, we've been kind of dreaming about that for decades.
I love the
actually.
Brooklyn. Wasn't it the Brooklyn that was
It was the Brooklyn.
Came up on the side?
Big collector's item. Yeah, that's right. It had the gull wing doors long before Tesla did, and but that's not how to do it. To any automaker to be viable has to sell to a global market these days because of the cost involved in capitalizing and developing a new vehicle and marketing it. So you can't build a national car industry just on niche vehicles that are sold in that country and that country alone. But what I think there's a possibility for a Canadian-owned OEM. We have, of course, Magna International, the big Canadian parts maker, and they actually do assemble vehicles in a couple of locations around the world, but not in Canada. And we've got all kinds of other capacity. We saw the Auto Parts Association in Canada pull together this Project Aero, they called it, where they could show a high-tech electric vehicle composed entirely of Canadian components. So, we have the possibility to do that. But first and foremost, we got to protect our existing share of the global business, and that would include keeping these facilities in Canada, keeping them fully utilized so that they're viable and secure. Attracting investment where we can from other OEMs. We've got some big investments from Volkswagen, for example, coming in with part of their electric vehicle strategy. We should get more of the Asian automakers invested in Canada. And, there may be a possibility for a Canadian-owned OEM, particularly with the shift to EVs. You are seeing some new brands arise in the auto sector. Some of them quite independent from kind of the legacy auto industry. So there would be potential, I think, for new players. But I'm less concerned with the logo on the car than I am with where it was made. And that's where we really got to focus on the Canadian footprint.
So for a long period of time, no one said there was going to be a new, car company. You had to be part of the big three or whatever. Mm-hmm. And then Tesla came out of nowhere with a brand new, car, an electronic car. I'm told that the Chinese cars, the Chinese EV cars are incredibly efficient, well produced, high quality, and 1/3 the price of the North American equivalent. Should we be doing a deal with China and saying, big trucks are the way of the U.S. car companies? We should go with smaller EVs from China, but make them in Canada.
Well, yeah, certainly the whole Chinese manufacturing strategy has been immensely successful for them, and frankly for the planet as well. They're leading the way on renewable energy and electric vehicles and other non-polluting technology. So good on them, and that's been part of their rapid development. Now we have a situation where China's got so much EV assembly capacity that they're producing far more than even their own market, which is a huge market, of course, can use. So this is part of the push for exports from China. You've suddenly seen in the last 3 years alone, China suddenly leapfrog America, Germany, and Japan as the biggest auto exporter in the world. And it's in part because of this excess capacity and over competition that they're seeing in the Chinese market. Now, the Chinese vehicles are looking expensive in China, but by the time you get them to Canada, particularly once you've met our regulatory requirements and the tastes of Canadian consumers, most Canadians don't want to drive around in those very small cars. They won't be as cheap as they look when you make that Canada-China comparison. Then there's other issues related to human rights in the supply chain in China. Some of the components produced with kind of near slave labor. That's not something that we can accept. And then some security risks related to the cyber software on the electric vehicles, and what would that mean if Chinese vehicles were traveling all around in the country? There's, I think, some reasonable concern about that issue as well. So I think we can learn from the Chinese in how effectively they have mobilized an industrial strategy based on investing in new technology, public-private co-investments in those facilities, using their domestic market to really kickstart the whole thing, and then finding where exports are possible. We have a lot to learn from that strategy, but I don't think just asking China to come in and save our auto industry is going to be the ticket.
Is 100% tariff on EV cars from China the right strategy?
Well, that was to align our process with the American process. So that tariff predates Trump. That came in under Biden because both countries were concerned about what a big surge of imports from China was going to mean, both economically and on some of those strategic and human rights questions that I mentioned. So the reason we did that in the first place was to try and, again, preserve some coherence around the North American market. That, of course, has been thrown out the window by Trump's actions. So I don't think that just unilaterally letting more Chinese vehicles in is going to help. That's for sure, particularly given everything else our automakers are on about. But that will be something that we have to consider as we think about how we define a Canadian strategy for the auto industry in a post-Trump world. All kinds of open questions there, including this one.
So, you've mentioned the auto pack as a model that we should be seriously thinking about. I had a defense expert saying we should be thinking about the auto pact in regards to the massive increase in defense expenditures that we're going to be occurring over the next little while, and demanding that a certain amount of jets, of tanks, of armaments, of
absolutely
everything be produced in Canada. What do you say to that, sir?
Yeah, 100%. The analogy is obvious. In fact, there was an auto pact for the defense sector. It was called the Defense Production Sharing Agreement, DPSA, and it came about at the same time in the 60s as the auto pact, and it served us very well for about 20 or 30 years, so that, when we made a major military procurement decision, big aircraft, for example, that we would negotiate with the companies involved, McDonnell Douglas or whoever, and ensure that a share of the work, obviously not all of the work, but a share of the work was done in Canada, so that we were getting a piece of that production, both for the Canadian procurement contract, but also for sales of that aircraft elsewhere. And that's a model that I think still makes a lot of sense. So, of course, in the free trade agreements, there's always a giant exemption for defense and security issues. So you're not constrained by free trade deals, which are kind of hypothetical these days anyways. So as we increase our defense spending, whether it's shipbuilding, aerospace, vehicles, of course, very important in defense, even some of the technology. Think of some of the communications technology or digital technology or space technology that's related to defense spending.
The Golden Dome.
That's where we got to make sure that, again, we're getting dollar for dollar in terms of Canadian production. Finding partners, not just Americans, of course, we're talking to Europeans and Asian manufacturers, and making sure that we build up our own capability at the same time.
I've been told that the jet that we're buying from the United States can be controlled from the United States from a data standpoint, that they can turn it off and on, that they can withhold maintenance and other things. And so therefore, if we continue to buy this jet, we're completely beholden to the American defense establishment.
Yeah, I'm not an expert on the technology there, Brian, but I have heard the same thing. And other customers of American defense contractors around the world, including some of the Europeans, have canceled their contracts with those American makers in part because of that reason. So, again, this is where Trump's chaos propagation is going to have long-term consequences on the relationships, including defense relationships between America and the rest of the world. And part of the solution is going to have to be for Canada to partner with the Europeans and the Asians and others to find ways to help each other wean ourselves off of any kind of dependence on American technology.
Our guest, Jim Stanford, has written a lot in the last little while. He's written about deficits. He's written about industrial strategy. He's written about youth unemployment. We're going to take a break and come back with some of these other issues in just 2 minutes. Stay with us, everybody. Interesting conversation with our expert economist. Stay with us. Welcome back, everyone, to the Brian Crombie Radio Hour. Real privilege tonight for me to have Jim Stanford, economist and director at the Center for Future Work. He's an economist that I've been reading for a long period of time. He used to be with Unifor, the Canadian Auto Workers. He's always a progressive voice, a well thought through, well backed up by analysis voice, and a very articulate writer. And so thank you, sir, for joining us. You appeared in front of somebody in Ottawa and said that don't worry about deficits. Seriously? Really? Don't worry about deficits?
Don't worry as much about deficits as people are worrying. That was before the Senate National Finance Committee, Brian, a couple of weeks ago, and they invited me in for views on the pre-budget outlook. I have to tell you, I really like going to those Senate committee hearings. They are so constructive and so polite and so collegial, and all of them, whatever party they came from, are committed to trying to find a way forward that helps Canada. It's just such a contrast to the House of Commons, where every question is politically loaded, and they're all there just to try and score points on the other side. So it was a great session. And I talked a bit about, some of the sort of quasi-hysteria we're hearing about the deficit. We're definitely going to have a deficit in this budget on November the 4th, probably bigger than it was this year. This year it was around $60 billion. Now that sounds like a lot, but relative to the size of our economy, it isn't. And, in case people haven't noticed, we're in kind of a fight for survival in Canada with Trump and his attacks and everything else. And this is definitely going to be a time to invest in Canada, and that's going to require money.
So give me a sense of how you as an economist think about it. I think a lot of people think the deficit is high, and certainly the Conservatives and people on the right have been making a lot of noise. But I've been told that the Canadian deficit to GDP is less than 3%, and the U.S. is like greater than 6%. And so that the deficit in the United States is dramatically more than the United States, and that we are either the lowest or the second lowest deficit to GDP in the G7. Are any of those numbers right?
Yeah, they're all right, Brian. In fact, I think our deficit is less than 2% of GDP, not 3%. And the Americans is 6% and growing because of those tax cuts that Trump implemented that we spoke of a few minutes ago. And it also applies to the debt. What's of more importance ultimately is how much debt you build up over time. Our net federal debt, in terms of financial debt, is about a third of GDP, about 33% of GDP today. And that has not grown a lot since the end of the COVID pandemic. Of course, we had the COVID and all the emergency payments, and in Canada, like everywhere else, debts increased at that point, but our debt burden has stabilized since then. And the reason that the math works this way, you can have a deficit each year, but as long as your economy is growing in nominal terms, then the size of the accumulated debt doesn't necessarily grow rapidly relative to the GDP, and that's exactly what's happened over the last 5 years or so since the end of the lockdowns. So in that regard, historically and internationally, Canada's debt problem is modest. And we have a situation where I think everybody agrees we got to invest in more infrastructure, Canada-wide, housing, affordable housing, and we still have to provide services for Canadians, especially if we're going into a recession because of Trump. So you can't ignore the deficit, but I do think on budget night, the deficit tends to get more attention than it deserves.
Another issue you've written about is industrial strategy. Does Canada need a more defined industrial strategy? Does government need to get more involved in industry, in free enterprise, in the capitalist economy?
Yeah, and to some extent, that's exactly what we were talking about with the auto issues, but and the other high tech issues. Think about things like aerospace, for example. Canada has a uniquely successful aerospace industry for a country our size. I think we rank fourth or fifth in the world in aerospace production, and we have good engineering capacity and research capacity in Canada. And it didn't happen because we like planes. It happened because right back to World War II, when we said we got to build fighters to help the war effort, and we're going to do it here in Canada. And then after World War II, we had C.D. Howe, our famous industry minister, committed to making these industries successful in the long run. And we had even public equity investment, and we used military procurement to support those companies, and even domestic procurement. We even had, when Air Canada was a public company, we made sure it bought Canadian-made aircraft. So in all of those ways, we built aerospace. We built a pharmaceutical industry with industrial policy. We built a telecommunications industry with industrial policy. We've got our whole high-tech cluster now around, Southern Ontario and Waterloo and Toronto and all of that. Same deal, industrial policy in different incarnations, including an emphasis on technology and training highly specialized people and so on. So I don't think there's any question. And the idea that, government will just stand back and let the free market do it, nobody does that. The Americans don't do that. They talk free enterprise, but they've got obviously even before Trump, they had their money in supporting American firms. And nowadays with Trump, he doesn't even pretend, right? He's even buying equity stakes in companies to try and make sure they pursue what he sees as the American national interest. And the Europeans have always been very active, the Japanese and the Koreans and the Chinese, all very active on industrial strategy. So that kind of idea, that government shouldn't pick winners, government should stay out of the picture, I think has lost most of its appeal. And this is a time, particularly with Trump's challenges, that we got to make sure we're building our share of those high-tech industries.
But people always say that government can't pick winners, and that government leads to massive bureaucracy, and that it leads to the opposite of creative destruction, that you keep alive companies that are too big to fail or should go through a rationalization and restructuring. What do you say to those criticisms of government industrial strategy?
Yeah, those criticisms are common, and I've been hearing them for years. And in a way, they're kind of disproved by looking around the world. A country like Korea, for example, which came out of nowhere and is now just a major industrial success story. That didn't happen by government staying out of it. Government was in there like a dirty shirt, including in public investments and supporting Korean companies with export subsidies, developing and subsidizing technology, using domestic procurement, of ships, for example. Korea is a huge shipbuilding success story, using domestic procurement of ships to help that industry get going and then spread its wings to the rest of the world. I think the historical evidence is pretty clear that if you're just going to sit back and wait for the market to deliver these things, you're not going to get what you want. In Canada's case, I can tell you what we'll get. The rest of the world wants our resources, and we'll get a whole bunch of extractive industries, but we won't be adding value to those resources, and we'll always be at the behest of the ups and downs of futures markets for all of those different commodities. I think most Canadians know we want to be a full-fledged industrial country, not just a resource warehouse.
You didn't write this article, but you did comment on it about youth unemployment, and you said that it was a growing crisis. The statistics were that youth unemployment is 14.5%, but if you took out the lower participation rate, it would be 18%. And then there was this concept that I'd never heard about before about labor scarring.
Yes.
People that are unemployed have lower income for the rest of their life, have a lower net present value of future wealth. What's the problem with youth unemployment today?
Youth unemployment, Brian, is kind of like the canary in the coal mine. It's an early warning sign of a weakening labor market. And the reason you see it in youth unemployment first, young people are the last hired, if you like, and the first fired. Generally, obviously, if young people are entering the labor market, so they're all looking for work. And if hiring stops, then they experience it right away. And then if you've got any kind of downsizing happening, in general, it's people with less experience who are going to get let go. So last hired, first fired, and we've seen that happen now. The labor market has been weakening for a couple of years. It was very strong right after the COVID pandemic. We had very low unemployment. You had help wanted signs everywhere. But for various reasons, that's changed, and young people are feeling it first. This labor market scarring that you speak of, particularly for young people, if you graduate into a weak labor market, so you're just trying to start your career, and you might take a year or two to find a decent job, and then you're going to grow over time, but you're still growing lower than the curve that you would have followed if you got a job in the first place upon graduation. And that's what they mean, where the effects of even a temporary recession can follow you through the rest of your career. I saw one paper that estimated about 10% reduction in your lifetime earnings for young people who graduate into a recession versus graduating into a stronger labor market. And that's a lot of money over a 35-year career. You know, you generally would make between $2 and $3 million in total cumulative salary over your career. 10% of that is $250,000 that people are losing graduating into this kind of labor market. This is why it's, again, so important to try and get the job wheels churning again, protect those industries in Canada, get those young people their first critical job.
It's that you start at an occupation lower than your qualifications and experience and abilities would suggest. It's because you don't get the mentoring, you don't get the training, you don't get the social network, you don't get the connections that are so critically important. And so I agree with you. I want you to explain something, if you could, to me, because you posted something a couple of weeks ago about U.S. trade deficits are not the result of unfair treatment, as Trump claims, but ongoing capital inflows into the United States, including from Canada. And you argued that we become a net lender to the United States, and we should reverse that. Can you explain that, please?
Yeah, well, first of all, you know, Trump in his whole trade war has been claiming victimization, if you like, that America has been mistreated by the rest of the world. And that's why America has these trade deficits. Trade deficit for them means they import more than they export. And he claims those deficits are a way of subsidizing the rest of the world. And he has it quite backwards. First of all, the trade deficit is a normal structural feature of the U.S. economy. They've had it for 50 straight years. And the trade deficit today is actually not big by those historical standards. And the only way they can have a trade deficit for 50 straight years is if capital is flowing into the U.S. economy to give the economy the money to pay for that trade deficit, basically to pay to import more than they export, or in essence, to consume more than they produce. And this is a well-known fact in economics. The capital flow is, by definition, the opposite of a current account imbalance, a trade deficit.
Where does that capital go? It's not going into building manufacturing plants. Where's it going?
Well, think about the American economy and look at what's happening in the stock market. Look at NVIDIA, you know, a company worth $4 trillion now. Look at the various, bubbles that are growing in the stock market or in private equity or even property markets, even crypto and other unconventional assets or private equity. So everyone with money around the world, if you're a rich investor or you run an investment fund or you're a bank or you're a central bank or you're a government, traditionally, you wanted a piece of your action to come from the U.S., in part because it's a very profitable place to be an investor. So for all those reasons, that money flows in, including from Canada. And I think this is an underappreciated fact, but our capital relationship with America has changed. It's completely flipped in the last 15 years. We once depended on U.S. capital coming into Canada to help develop our industries. Now it's the other way around. And on a net basis, there's $1.6 trillion more Canadian capital invested in America.
We should spend that $1.6 trillion in Canada.
Yeah, well, and here's the kicker. A big chunk of that is our own pension plan. The Canada Pension Plan has half of its invested assets in America. And, you know, from a pure short-term investment portfolio perspective, you might say, well, that's a good thing because then they got a piece of NVIDIA and look at what NVIDIA is worth these days. But if you're thinking about how you develop Canada's economy, especially now, why on earth are we investing our own public pension in a country that wants to make us the 51st state? This is where I think we got to rethink the kind of short-termism that has governed a lot of our pension investing and other investment decisions.
Fascinating conversation tonight with Jim Stanford. We're going to take one last break and come back with one last question in 2 minutes. Stay with us, everybody. Jim Stanford, thank you so much for joining us tonight. This has been a wonderful conversation. I really appreciate it. If you sat down with Prime Minister Mark Carney tomorrow, what would you tell him to do?
Well, I'd say, look, Prime Minister, you rallied Canadians behind you in that election that was just a few months ago with a sense that, yeah, this is a daunting moment, but we've got the commitment to Canadian values and a passionate loyalty to our country. And yeah, it's tricky to bargain with Mr. Trump, and you got to be smart about it. But please remember and channel that passion that Canadians have. We actually need our elbows up. We need a Gordie Howe with his elbows up to make this country viable under Trump and survive and prosper after Trump.
Elbows up. Jim Stanford, thank you so much for joining us. I really appreciate it.
My pleasure, Brian. We covered a lot of ground, and it's great to chat with you. Thank you.
That's my show for tonight. Thank you, everyone, for joining us. Really appreciate it. You can catch me every night, 6 o'clock on 960 AM. You can stream me online, even from the West Coast, at www.saga960am.ca. All my podcasts and videos go up on my website, briancrombie.com, on LinkedIn, on YouTube, on social media, as soon as the radio show goes to air. Thanks. Good night, everybody.